This speaker is Jess Houlgrave, Head of Crypto Strategy at GTM and Checkout.com. And what Jess wants to talk about is how businesses should think about Web3 in terms of future strategy. So Jess, over to you.
Thank you. Hi everybody, it's really nice to be here today. Here we go. How do I do this? Great. I'm Jess Houlgrave, and I lead crypto strategy at Checkout.com. Checkout, I'm on the right slide here. I'll start with a bit about Checkout, but what I really want to talk about today is how business leaders should be thinking about this thing that we all call Web3. We're going to talk about what that is, and then some of the kind of key building blocks for that as a technology that you can think about how it might impact your business models and those also of your competitors, suppliers, partners, because I think that we're seeing this now start to infiltrate amongst a whole sort of wide range of things. Checkout is a global payments company. You can see on the right-hand side some of the clients that we work for. We process payments for Netflix, for Shein, global retailer. And really the piece of the technology that we provide is that when you as a consumer go onto a website or onto an app and you pay for something with your debit card, your credit card, some other local payment method, maybe if you're in the Netherlands, you're using Ideal or so forth. If you're in Latin America, you're using Boleto or something else. We just provide that whole infrastructure that allows a merchant to accept any form of payment method from their customer. And then we provide tooling around that, like fraud capabilities, and then payouts. So the ability for a business to actually push payments out of the business towards their consumers or towards other businesses using bank transfers or card transfers. So we partner closely with Visa and MasterCard. And most people will never have heard of us because we're purely B2B, but chances are you've probably sent us your card details at some point. We're highly regulated, so don't panic about it. We'll keep them safe. We are now about 2,000 people in 22 offices around the world. And change to the right-hand side, you can then also see what we do in the crypto space, which is to provide that same capability, the ability to accept payments and push payments out of a business, but to crypto businesses around the world. Some of the big exchanges, I didn't have time, anybody who's been watching Twitter for the last 24 hours will notice FTX up there. Probably ought to remove that from this set of slides, and I can touch on that in the Q&A. But this gives you an example of the kind of businesses that we provide payments processing capabilities for. And then we also have a crypto product offering, which is much more nascent, and I'll touch a little bit later on about how crypto as a technology is impacting the broader payments landscape. So not processing for a crypto exchange and talking about cryptocurrencies, but actually how this technology can just make payments and moving money around the world a bit more efficient. So what is Web3? This is the definition that Google gives me, which is that Web3 is an idea for a new iteration of the World Wide Web, which incorporates concepts such as decentralization, blockchain technologies, and token-based economics. And most definitions are some variety of this. They layer upon these ideas of new forms of governance, new forms of distributed ledger technology that allows us to embed value in the internet in the way that maybe Web 2.0 embeds content within the internet. We did a survey earlier this year. We surveyed 3,000 merchants around the world and about 30,000 consumers. And 67% of the C-level participants, so of that 3,000 merchant base, said that they believed that Web3 technology was going to meaningfully impact their business strategy. And specifically, and I like this one as well, is that 65% of them said that the ability for people as individuals to own their data more effectively as creators and as sort of data owners is going to disrupt B2C dynamics as well. So we're talking here about every different kind of business needing to think about how this technology plays into their future. So I'm going to start with a little bit more about what this is. And then there's three kind of, I could talk for hours about this. And happy to do so afterwards with anybody, but we're then going to touch on these kind of three major building blocks for Web3 technology, for how businesses are thinking about it today, because I think there's a lot that's very forward-looking, and we can go crazy about the metaverse and augmented reality and all of these other things, but the three areas that we're really seeing things actually happening, and areas that you can be inspired or criticize, or you can actually take a look at what's going on, and those are not showing up on my slides, but they are, broadly speaking, here we go, engagement and NFTs, so how brands are engaging with their consumer base, payments, as I said, how we move money around, and finally identity, and I'm going to split that into the identity of people and the identity of objects. And I think this sort of supply chain concept of identity is again, a really kind of core building block. And then we'll talk about what's next, and then we can talk about FTX in the Q&A. So what is Web3? This is sort of how it starts. This comes from a Web3 fund based in London called Fabric Ventures. And I like this because I think it's kind of something that we can all relate to. So the idea of Web 1.0, we're sort of starting with the early signs of e-commerce. Amazon, the idea that you could buy a book online, you've probably now heard of them today, you can buy a lot more. Netscape, really you were there just sort of as a user. And then in Web 2, we start to have this idea of you being able to contribute. You can contribute content, so you can start to write blogs, you can start to be a creator, you can have a YouTube channel and have lots of people watch whatever you're doing. You can list your home online and actually start to kind of engage in these peer-to-peer marketplaces. And I think this marketplace thing is something that I'll come back to, because we expect that 70% of e-commerce by 2030 is going to be around these marketplaces. And so really, really important part of how web is developing. And then finally, we move into Web3, and Bitcoin is the one that most people have heard of, even if they haven't heard of anything else. Anybody here who hasn't heard of Bitcoin? Great. Started nearly just over 14 years ago. Anniversary was on Halloween. And it was a white paper that was put out by an anonymous individual, Satoshi Nakamoto, that had come up with this decentralized distributed protocol that effectively it allowed us to embed value onto a blockchain by solving a double spend problem. So the idea that really by distributing the database amongst a whole range of nodes, it becomes very, very difficult, in fact impossible, to manipulate that in a way that you could double spend value. And so we start to be able to embed value into the internet and see these two things combined. And that is really kind of the very fundamental building block for now, how we think about Web3 more broadly being built upon it. And so you can see these blockchains on the bottom. Bitcoin is one of them. There's now an awful lot more, mostly with different sort of specialized needs. They're faster, some are cheaper, some are not very good, but we're still really experimenting with them. On top of that, and this is where I'm going to touch on these kind of three really core building blocks, is digital assets, cryptocurrency, and then identity. And then, and this is where, sadly, we don't have time today, but for those of you who are really interested in it, this is where then we start to become a little bit more creative and think about new governance models, decentralized autonomous organizations that utilize blockchain to actually run and govern organizations very differently than how we maybe build companies or businesses or groups of individuals today, application layers that allow you as a consumer to engage with this technology, and then of course the future vision of us all living in some form of metaverse. But where are we really? This, I think, is a kind of interesting way of thinking about it. People say we're like the early .com years. You can see the sort of the solid line is the rise of the internet in terms of the number of users, and the dotted one is cryptocurrency. So we're very, very, very early on. And I think this is where, as businesses, it's important for you to start thinking about these things and observing what people are doing, but also bear in mind that this is early, this is very experimental technology, and so evaluating the risk that these things bring to your business is also really important. About 300 million crypto users around the world, possibly slightly less today, bearing in mind the news. But real money being spent. So this $2.5 billion number I love. This is the number of dollars spent just in Q1 of this year, of actually Visa's fiscal year. But those are spending amounts that are a crypto-backed card, so a wallet that holds USDC or some other form of cryptocurrency on it that you as a consumer are then going out and spending in a shop. And that number has continued to rise, actually, over the last few months. And so it's really interesting that this is real. It's small, but it's real. So let's look at this first idea, that of engagement and NFTs. To introduce the concept of an NFT, what we're talking about here is a non-fungible token. That means it's a digital asset that is unique. It might be one of a limited edition, but we can think about it as an asset that is unique. So unlike a Bitcoin, where my Bitcoin is interchangeable with Mark's Bitcoin and we can swap them around, my non-fungible token is kind of unique. Most people have heard of this through the $69 million sale of a Beeple piece of art that was presented as an NFT and sold at Sotheby's last year. Skyrocketing prices in the art space for NFTs. Crypto punks is another big one. Those were going for a few $1 million a while ago, probably slightly less again at the moment. But these assets that people are using as symbols of their identity, actually, and as an identifier of a group that they might belong to, as an identifier of a community. And these are some of the brands and businesses that are now starting to take this seriously. So when we think about Burberry and Mythical Games, this is a really interesting partnership. Mythical Games is a kind of new gaming studio, and Burberry have tapped into that market and said, I'm going to issue a Burberry NFT that's representative of a Burberry kind of fashion item, but in the metaverse, as a way of engaging with a new consumer base. Particularly for these luxury brands, what it's doing is allowing them to signal that they're tech forward and cool and up with the kids, and accessing that consumer base that may not be their consumer base today, but that otherwise is very, very hard to advertise to, because Gen Z don't watch TV adverts anymore. They play games, and so what they want to see in their gaming environment is the brands that want to sell to them in the future. And so Burberry and Mythical, Bauman and Barbie, again, a really good example. And Tiffany and CryptoPunks, which is slightly different, but again, Tiffany, high-end luxury brand, want people with money. CryptoPunks owners typically have made money through kind of the crypto cycles. And so Tiffany started producing these kind of one-off keychains or kind of necklace pendants that were representative of the punk that you own. So you had to own the punk in order to buy it. And this is, again, a kind of really deep and interesting way that brands are engaging with a consumer base in a way that kind of we haven't been able to see before, because we haven't been able, as businesses, to kind of identify these people in such a specific way. But Web3 is open. We can identify every single wallet address that has a CryptoPunk in it, and we can start to kind of put those analytics together to target people in a kind of more specific way from a branding perspective. On the bottom line, some kind of broader examples. Starbucks, I think, is the one that hit the news really this year. And again, evolving from this idea of just I can own a non-fungible token in my crypto wallet and have it be a representative of my identity, to actually start to kind of generate use and utility from it. So in the Starbucks example, as a Starbucks consumer, you can have a Starbucks NFT. And what that's going to do is it's going to allow you access to different Starbucks games. If you perform well in that, that's going to allow you to earn rewards. Those rewards are going to allow you to access new coffee kind of flavors that you might not have done before. And so this is, again, a way of deepening those relationships between brands and their consumers through this feeling of like, I own something that is representative of this brand, and I feel connected with it. 66% of consumers, 66% of businesses say that NFTs have the potential to bolster their loyalty schemes. 62% plan to issue coins and NFTs as part of their growth strategy in 2024. This is again of that 3,000 merchants that we surveyed earlier this year. 76% of all consumers want to be able to make payments and engage with brands through loyalty schemes. But on the other hand, 41% of consumers don't think that NFTs are going to be here in 5 years' time. So I'm not here to just flash you up the exciting bits of this. I think this is about a reality check that we're still very uncertain about the role that NFTs are going to play in the future. But many of the world's biggest brands are deeply thinking about this. I had the privilege the other day to be with Salesforce on the West Coast with brand CMOs from all sorts of different companies talking about how we put vaping NFTs into the metaverse, talking about how as financial services institutions we can use NFTs to act as kind of certificates and kind of engagement for the younger generation when we educate them about their kind of own financial wellness. And so this is kind of crossing the spectrum from fashion to banking and everywhere in between. Payments. This is my top topic because it's the one I like the most. But this is, again, another kind of area where we're seeing meaningful growth, I think, for the space. So what are we talking about when we talk about crypto payments? I think we're talking about two very different things. Firstly, we're talking about this idea that a brand wants to accept, a brand or a business wants to be able to accept cryptocurrency in the form that we know it today, Bitcoin, Ethereum, even a stable coin like USDC, as payment for goods and services. You can see just a kind of a flash of different brands around the world who now enable consumers to pay with cryptocurrencies. But what I like to kind of do here is double click on why. And when I speak to brands like these around the world and they're saying, hey, do I need to do this? I'm not sure how many of my consumers are going to want to be paying with cryptocurrency. There's really like two main drivers that exist today. Number one is coming back to this kind of signaling point. It's, do you want your brand to be associated with being forward-thinking, technologically advanced, and interesting specifically for younger generations for whom cryptocurrency and fiat currencies actually don't have much delineation in their mind. They think of these things very much in the same way, and Gen Alpha, or whatever is coming next, will be even more so, and we'll have this kind of spectrum of traditional fiat assets, cryptocurrencies, central bank digital currencies that for the people being born today will feel like one and the same. They will think about moving value using those assets very much in the same way. And so some of these brands are doing it for that. They're doing it for me to say, I'm forward thinking and I'm tapping into this kind of mindset of the next generation. Some of these brands are also thinking, hey, there's people out there who've made a lot of money by buying cryptocurrency over the last 10 years, and that is a user group that I want to tap into. And so the Off-Whites, the Farfetches, the Hublots of the world, they are really doing this for that reason. They're saying, hey, you can come and you can spend your cryptocurrency with me. I'll make it very easy for you. You don't have to go and do all these conversions back into fiat currency in order to be able to spend that wealth that you've generated. And then finally, and this is the sort of third one that's really emerging and less relevant to the brands up on the slide, but actually payments technology is very inefficient. It's great because that's what gives me a job, to solve these inefficiencies, but it's very inefficient. And so particularly when we start thinking about cross-border payments, less so here in the UK, it's very easy, we have got faster payments and pretty effective means of moving value. But when you start talking about particularly emerging markets and cross-border movements, actually kind of cryptocurrency has a way of moving that money much more effectively and efficiently and at a lot lower cost. And so again, what are people actually kind of saying and doing about this stuff? 30% of the merchants that we surveyed said that they accept cryptocurrency as a payment method. Now, I do want to come back to this idea that like there's lots of different ways of doing that today, and so it might not always be that that's the number one choice on the checkout page that you see, but people do enable that. 40% of consumers have a desire to use cryptocurrency, not just as investment, but as a payment method. And that's a stat that we've seen change actually quite dramatically over the last couple of years. to 2020, the 2020 survey that we did that was on a much smaller scale, people were really thinking about cryptocurrency as an investment asset. It was something they wanted to hold. They thought they were going to generate wealth that way. People's understanding of the technology and what they can do with it has expanded, and so people now understand that they can use cryptocurrency as a payment method, and they really have the desire to do so. This comes back to my point about tapping into new markets. 82% of merchants who have enabled cryptocurrency as a payment method say it's brought them new consumers. But on the other hand, and here's my downside piece, 48% of merchants are really concerned about the regulatory landscape, and that's why they haven't kind of ventured into this space. And I think this is, again, a really important consideration, particularly on the payment side. I'm very optimistic. Here in the UK, we're getting a lot more clarity around that, and you can certainly find partners that enable you to do this today. But these are the conversations that are being had around the board table about how much risk we want to be able to take in order to start implementing these kinds of technology into our business. And then finally, in terms of my kind of three big building blocks, this idea of identity. And identity can take on many different things. There's a very obvious use case that says my passport could exist on a blockchain that would enable me to reveal specific data points about myself. The classic one is when I go into a bar, they just need to know that I'm over 18. I know I don't look it, but they don't need to know my address and all of those other details that exist on my driving license, but I kind of have to show them my whole driving license. Whereas using this kind of technology, we can just expose the fact that, yes, she's over 18. But actually, it becomes a lot more than that, and so what we see here is use cases that vary from like tracking food through supply chains to make sure it's actually coming from the source that we say it's coming from. That's a Nestle example. De Beers, who are tracking diamonds using blockchain technology, again, to kind of a lot of risk and attack vectors in a diamond supply chain, and so how can we ensure that these diamonds are coming from ethically sourced mines, and they're coming from where we say that they're coming from, and how can we kind of use this technology in that landscape. Maersk Shipping have a huge blockchain supply chain program. And then on the bottom, some more innovative ones. So Sonoco ThermoSafe is all around tracking that data in a kind of immutable way around pharmaceuticals. So how can we prove that actually these pharmaceuticals have been transported around the world and haven't gone above a particular temperature, for example? And how can we make sure that that data remains secure? In Colombia, they've started issuing degree certificates on the blockchain. So how can we actually say, yes, this is a certificate that belongs to somebody, I can prove it, I own it, and that forms kind of part of my wider identity. So not necessarily as an individual just talking about government-issued identity documents, but what are the components of my life that make up who I am? And education is a really important one. Again, these have different impacts in different places around the world because education institutes that exist in incredibly stable countries, you can phone that university today and you can check that actually, yes, Jess does have that degree from where she says it does. But there are places around the world where we know that that's not the case, where women are no longer allowed to go to university, where universities will deny that that student ever took part there. And so this immutable technology has more than just like the idea of being able to issue something on a blockchain and have it be secure, but has actually like really fundamental impact for how we think about humans and their own development and their own security and their freedoms. And so what are people actually doing? 48% of businesses say that they're interested in using blockchain-based identity to perform KYC checks. KYC is very complicated today, and so if we can truly get to a place where we have blockchain-enabled identity, that's going to solve some business inefficiencies, perhaps. 67% of leaders that we surveyed said that blockchains could make supply chains more efficient. And 81% of businesses agree that they'll help with traceability in supply chains. But only 3% are now deploying this technology at scale. And so again, this is an example of where there's a lot of promise, and a lot of potential for this technology in terms of business development and strategy. But the reality is often hard. Who do you partner with? Which technology do you implement? How do you do it to generate real ROI for your business rather than a nice publicity statement that says you're doing it, but actually, particularly in today's macroeconomic environment, we're all being judged by a much higher standard, and we have to actually deliver returns to those businesses too. So kind of what's next? This is always a very tough question because I think that what's next really depends on how people start implementing this technology and the experimentation that we see around it. And I think a lot of that is unforeseen. Even 5 years ago, we had many hypotheses about how these technology would play out within business. And some of the use cases that have emerged were kind of very surprising. And so I think that what's next depends on how businesses start to implement it. But I think particularly for me, and again, we're sort of coming up to time and I want to make sure that there's time for questions. But once you've mastered these kind of 3 basic building blocks of how this technology might impact your business, starting to think about governance, starting to think about privacy-enabled technology that allows you to build and preserve data in a different way, I think is important. And then there's these sort of like key topics that I think are going to really drive change in this space over the next few years. Number 1 is regulation. Again, kind of clarity from a regulatory perspective about this technology, whether it's a recent call about regulating NFTs, which I hate because an NFT is just a technology. What we should be regulating is how we use those NFTs and the kinds of activity that is conducted with an NFT. All the way through to payments. How we think about user experience, and I don't know how many of you have ever bought cryptocurrency, tried to buy a good or a service with cryptocurrency, have an NFT, but that user experience today is still quite clunky, and for the geeks amongst us, that's fine, and we're prepared to deal with it in order to be able to experiment, but there's still a long way to go before my mom and everybody else actually kind of can use this in a way that can bring value to them. And then we have these kind of ideas of risk and security that are still challenging. Trust, which is ironic, given this is supposed to be a trustless technology where you can trust the database rather than having to trust people around you. But people still don't trust the industry, and sadly, I think that there are valid reasons for that. And then finally, where do we actually create use out of this? Because I think whilst we're still in a very fun experimental stage, it's that value question that I think is the real one. Where do we create useful applications, useful for consumers, useful for businesses, that are really going to drive returns? So with that, I'm going to pause and hand over for questions, I think.
No problem at all. Thank you very much, Jess. Thank you. Just remind you that Slido is an option here if you want to put in a question that way. Any question from the floor, please? Gentleman there, middle row.
Hello. So the blockchain can be used in 2 different ways: through a web interface or directly through the blockchain itself, through API calls. So what you talked about today is consumers using a web interface then goes to the blockchain to do some transaction. Have you come across any applications where actually systems can do orders on the blockchain itself? Systems can make orders and systems buy things without having to manually go to a web interface and use that.
So I'm going to repeat the question, and correct me if I'm wrong, because I think I caught most of it, but the question was around kind of those user experience interfaces, and I think I touched mostly on the sort of web user experience, but are there instances where we see non-kind of interface-driven interactions with blockchains? Very much so. Often just directly via APIs that trigger subsequent actions. So the supply chain one is a great example here. So it's not a web interface, but when I scan a barcode, that enters a kind of an entry on a ledger, maybe even not even having to scan a barcode, but using Internet of Things devices that can then also be connected to say, this asset was in a particular location at a particular time. That can generate ledger entries as well on blockchains. So there's lots of different ways of businesses thinking about this. Hard to kind of differentiate them if you're just talking about those consumer interfaces, but I think really once you start getting behind the scenes on that supply chain side, and also on the payments side as well in some instances, then you start to be able to abstract some of that complexity. And I think that's where my hypothesis is that probably in 5 years' time, most of you will have benefited from this in some way, shape or form, whether that's just something that's been delivered to your house or something that you've bought, but you probably won't even know it. And I think that that's really when we start to see this kind of mass adoption of this as a technology within business, is when we can get to the stage that it's so easy that you as consumers just think it's better without knowing how.
Can I ask what might be a very stupid question? I don't know. What is the point of NFTs? I mean, you were talking about them. I'd never heard of them before. You were talking about them, and I kept on thinking of the kind of plastic tokens that I used to collect as a kid with cartoon characters on it. Other than the novelty value, what advantages do they confer?
So I think the question is, like, what is an NFT, right? It's just it's a piece of technology. And so the first use cases that we have seen are these collectibles, whether they're kind of digital Pokemon card or a piece of art. There's a novelty value to it. There's more than that, I think, in some ways, in the sense of like creating that part of your identity, so that you identify as part of a particular community by the virtue of the fact that you own that. But we're still in this kind of like somewhat superficial territory for what this does. When you then like think about how this technology can be applied in different ways, that's when you start, I think, to tap into use cases for the NFT that might be really very useful. And so the idea of issuing certificates on a blockchain, education certificates, is, again, like, those are non-fungible tokens. It's my name, it's my university, and it's my degree that's recorded on that NFT. That's not interchangeable. I can't swap mine for yours. But it is an NFT that is representative of my education, and that might be valuable, again, coming back to this use case of, like, not all institutions are going to live forever and be reliable. In financial services, already we start to see things like bond issuance, kind of securities issuance using certainly tokenization, but also some non-fungible technology kind of being embedded in that as well. So basically anywhere where you want to prove something exists, prove that it's unique, and prove ownership of it is it opens up the ground for thinking about an NFT.
And why can't they be forged?
Again, so this comes back to like why this technology is important, and I didn't touch on that today, but the base case for a blockchain is to say that traditionally a database might exist on your computer, it might exist in a data room, but it's a single database, and if I hack into it and I change a line, that database has fundamentally changed. This is the simple version, but so forgive the kind of the lack of nuance to this. But really, what a blockchain does is it says everybody in this room runs a version of that database, and we all have our own version of it. We're all a node on that blockchain, and so what I need to do if I'm going to try and hack that database is hack into you all at the same time. Very, very, very difficult. If I just hack into one of you, and I say, hey, this is the true version of the database, everybody else is going to say, no, that doesn't match mine. This is the true version of the database, and by the way, 400 of you agree on one version and I agree on another, we're going to go with the majority. And so it's really just a very kind of sophisticated database, but one that by distributed consensus gives us this idea of immutability.
Okay, fine, thank you. I'm sorry to have nicked two of the questions. Cross there, please. Come to you in a moment, sir.
Earlier you mentioned a statistic that I've run across before, which is that people are increasingly not viewing their cryptocurrencies as investments, but rather as currency, as a thing to purchase with. And that this is, if I understand your framing, a driver for why businesses might want to engage with cryptocurrency. This change in behavior can be seen as consumer enthusiasm for the currency itself. Seen from another perspective, it looks an awful lot like investors trying to offload a bad asset. Given that it is very difficult to turn cryptocurrency into, for want of a better term, real money quickly, how are companies, in your experience, mitigating or accounting for the inherent risk in holding that asset? How are they making sure they don't end up holding the bag like everyone who bought subprime in 2008, basically? Not to come across as overly cynical, sorry.
No, not at all. So the question really here is, I think, like, what are some of the advantages of paying with cryptocurrency, and like, is it easier to pay with cryptocurrency because you don't have a way of trading out of that asset, and then like how do businesses manage that risk? So to kind of talk to the first point, I actually think that today, if you're trying to move less than $100,000 from a cryptocurrency, depending on what token that is, if you've bought a token with no liquidity to it, then you're going to struggle to also find a merchant that's going to accept that. So I don't actually think that there's that much difference in terms of liquidity of being able to pay for assets or pay for goods and services versus trade out of them on an exchange, because the way that any payments provider will have built this technology is to say, like, we're going to build in some of that price risk and volatility into the service that we offer. So I don't think that most consumers are using this as a way of exiting assets. But that may be the case. Where we actually see a lot of that drive is in these like niche spaces where paying with cryptocurrency, it makes more sense. So often in gaming, applications and things like that. When it comes to like how businesses should think about, if I want to accept cryptocurrency as a payment method, but I want to manage the volatility and the pricing risk, today there are many third parties that will manage that for you. How that technology works is that basically what you offer to the consumer at the checkout page is a live quotation that says, okay, you wanted to buy a pair of shoes for $100, you select your currency, you want to pay in Dogecoin, great. Hey, this is how much Dogecoin it's going to cost you, and that quotation is live for 5 minutes, sometimes 20 minutes. If you as a merchant want to offer a 20-minute checkout consumer, then the spread that you're going to pay on that quotation is going to be larger because you're sending an API call to a liquidity provider in order to lock that in. And then that liquidity provider will actually often provide fiat to the payment processing company. And so most of the companies out there that are offering crypto as a payment method don't touch the crypto at all themselves. They're getting settled by their payment services provider in fiat. And aren't exposed to any risk, and the risk is actually borne by the liquidity provider that's embedded within the technology, but they've priced for that in the quotation that they're offering.
Hopefully that answered your question. I'm sorry, sir, just in terms of time, I'm going to have to sort of call it quits. Perhaps you could grab Jess afterwards and ask the question directly. Ladies and gentlemen, can I ask you to thank Jess one more time, please? Thank you. Thank you.